great occasion today. The last workshop that I hosted was, in fact, a foreclosure prevention workshop. And as you can imagine, those horror stories. And it's important that we learn from those types of things. And today, this workshop is something that you'll learn how to purchase and the right way to purchase. The city does its best to inform our residents, and not just our residents. Many of you may not even live in our city. But we try to host these types of events, free events, for your benefit. I'm hoping today that once you complete the workshop and you obtain your certificate, that you will consider purchasing a home in the city of Miramar. Now, we don't have a whole lot of money to work with because the state, unfortunately, didn't give us all the money that we needed, but we will have some incentives for you. That program will open in July. So once you obtain your certificate, you can go to any city that offers first-time home buyer incentives. But please, look at what we have to offer in the city of Miramar. We are open for business. We have a lot of new things coming on stream. We have our beautiful parks. We have amphitheaters coming up. We have our theater. And it's a nice place to live and also work.
It's always a pleasure to work with colleagues who definitely, truly care about the community and provide resources in a forum like today to be able to educate the community as it relates to options, especially as fulfilling the American dream and owning a home. And just like Vice Mayor stated, the City of Miramar is a partner with you. And for those of you who are not residents of the city and would love to move to Miramar, we welcome you. We have a diversity of housing stock options here. They may be limited, but I'm sure you're all on the hunt and looking for that perfect home. And I'd like to thank Vice Mayor Davis for putting on and hosting this event so that you all can have even more resources to make that dream a reality. So welcome again, and hopefully the information is beneficial. And we look forward to seeing you all at a commission meeting as a resident one day. Thank you.
Thank you so much.
People just want to know how to buy a house. They want to avoid mistakes that other people have made. Because as you see on the agenda, we have an inspector, we have a realtor, a lender, talk about fair housing, predatory lending, all that stuff that will help you avoid some of the mistakes in the home buying process. The bank is going to give you a pre-approval based on your credit. And we go into a lot of that because there are different banks that have different credit scoring requirements. Some lenders will require that you have a 600 credit score. Some require that you have a 640. Some require that you have a 680. Depends on the program. We have lenders that require that they'll give you a loan if you have no credit score, okay? But you can't have bad credit. If you're never had credit and you have alternative credit, which we'll talk about later, it's possible to get a loan. But not all lenders do it.
I'm going to talk to you today about the market so you kind of get a sense of what the market is, what the conditions are, and then I'm actually going to speak with you about the physical process of shopping for a home. The market is something that is actually almost like a living, breathing entity. It doesn't stay the same. The market we have today is dramatically different from the market that we had 6 or 9 months ago. Basically, markets fall into 2 types of categories. It's either a buyer's market or a seller's market. So we're going to do a quick poll here to find out what you guys think. How many people think we're in a buyer's market? Okay, more people. How many people say sellers? A few people. Okay, here is the reality of the market that we're in. Our market is broken down into different layers. Okay, there is a first-time home buyer layer. There is a trade-up buyer layer, and then there is a luxury buyer layer. And our market, our first-time home buyer market, is a very strong seller's market. Okay, that's a very strong seller's market. Now, most people in the room thought that we were in a buyer's market. When you're in a buyer's market, there are a lot of homes to choose from. When you see properties on the market, they stay on the market for a while. You can look at them, you go home, you think about it, you come back, you make an offer, you negotiate with the seller makes concessions, and you're able to work up a deal for yourself. That is not our first-time home buyer market. In our market, the market we have today, what we are faced with is few properties on the market. The properties don't stay very long. So if you're calling on properties, you're looking at stuff on the internet, and you're getting the feedback that the property is either under contract, they have multiple offers. If you're putting in a bid, you're bidding against other buyers. Is that anybody's experience? Has a show of hands? Yeah, okay? That is our market. So I say that to tell you, not to discourage you, but to make you aware of the fact that even though you're hearing on the news, this is a great time to buy, it's never been a better time to be a buyer, the reality is it's a good time to buy, rates are low, and there are programs that are available that have not been available for a while. Prices are lower than they've been for a while, but at the end of the day, it is not a buyer's market. So you have to be ready, and you have to recognize that it may take a minute to get into a property. Okay, you may have to write multiple offers. You may end up in bidding wars. It's not necessarily, if you see it and you want it, it's not necessarily a slam dunk that you're going to get it. Okay, so don't be discouraged. The point is to tell you that it's not just you. Don't be discouraged. That is the condition of the market that we're working in. In our market, and that's all three counties, Dade, Broward, and Palm Beach, what we're seeing that there is not a lot of property to choose from, and it makes it hard for a buyer to get a good deal. We are having a hard time as first-time home buyers getting these properties. The prices are going up because they are going up. The statistic is the prices are 20% higher this year than they were last year. That's an NAR statistic. So you are right. The prices are starting to tick up again, and we're worried that we're going to be locked out of the market. That is a legitimate concern. One of the things that I can say to you is when we talk about the actual process, I'm going to give you guys a little tip to help you ask your realtor to get you on the cutting edge of the information as it becomes available. We also have in our office a program. It's called the First Time Home Buyers Club. It's the Baby Steps Club. And one of the things that we do in recognition of the fact that it's very difficult to find properties is we go out and we work with different municipalities. Sometimes, like the city of Pompano has 20 homes that they're looking to put first-time home buyers in. So it's their NSP program. They're rehabbing those homes. Some cases, they're brand new construction, and they're not working with any investors. So there are some programs that are out there that are geared for first-time home buyers. So what we do is we encourage people to sign up for our free program, and as we get that information, we send it out to you so you can get a look to see if any of those properties are suitable for you and your family, and that way we try to help with the crisis. But you're absolutely right. There is a challenge. One of the things that we've discovered after the last foreclosure meltdown is families that are educated before they buy have a much lower incidence of foreclosure. So what the HUD has done is that they're really emphasizing getting the education out to folks now, and so this class is a part of that program. The MLS has an auto notification system, and what it does is if your realtor sets you up in the system as their client and puts in the criteria that you are looking for, the minute that the houses that meet that criteria come on the MLS, it will be emailed directly to you. It will be emailed to you, it will be emailed to your realtor, so you can now call and say, hey, I saw this come up, I'm interested, can we go and see it? So it gives you a little bit of a head start as opposed to the reverse, which is waiting for your realtor to go ahead and find the information and then call you. So that's one of the tips that I give in terms of doing that. And then the other thing is just to try to work with as many different programs as you can. Sign up for our Baby Steps Club. We're going to just try to get as many municipalities and as much information as we can out to you, and just be persistent, guys. I mean, that's what I guess I'm trying to say here at the end of the day. Don't be discouraged. It does take, if you're doing it since December, I know it gets to be heavy going, but don't be discouraged. It's worth it when you get there, but it is going to be some work. Does this include foreclosure properties? It includes every property that's listed on the MLS that meets your criteria. So say you come to me and you say, hey, Sharon, listen, I would like a 3-bedroom, 2-bath in Miramar. I want it for $150,000 or less. Can you set me up for that? I put that in. If a house comes up for $149,000, it shows up in your email. If it comes up for $151,000, it does not. I don't get to see it before, and I tell that to people when I set them up. I don't get to see it before. The first time I set somebody up, the lady called me up, she goes, "How could you send me this house?" I'm like, I didn't see it. It meets your criteria. I'm not making a value judgment. I could never live here. I'm sorry, I just put your criteria in, and this is what came up. So, you know, you'll see it as soon as I see it, and you get to decide, okay, yeah, I can live with this or I can work with this, but yeah, you need to work with a realtor to do that. The banks are not prepared. They don't have the staffing, and they don't have the desire, to be quite honest with you, to work with the public directly. So they are listing through realtors. One of the challenges that we're going through right now is that there are a significant number of houses that got caught up in a huge foreclosure racket, crisis, whatever you want to call it. And those properties are slowly coming onto the market. It is my hope that towards the middle and the end, to the end of the summer, we're going to see a little bit more of those properties moving. But everybody here knows of at least one house that they've been driving by for the last year and a half that's been empty, that they can't get information on, that they can't get anybody to talk to them about, and unfortunately that's just where we are now. So hopefully those houses are gonna make their way through the foreclosure process. In some cases they were incorrectly foreclosed upon, and now they have to be re-foreclosed on. Just so you guys know, the foreclosure process in the state of Florida is now taking somewhere up to 634 days, which is just about 2 years to foreclose on a property. So if they foreclosed on it and they did it wrong and they have to put it back in the pipeline to start it again, it's gonna be a while, okay? Just because you're buying FHA does not mean you cannot buy a foreclosure. It just means you can't buy a certain type of foreclosure.
I was just gonna say, is it even worth my time to look at them?
Yes, but I wanna go over what's in the market right now, and when I get to that part of the presentation, you'll see that you're really locking yourself out of the market if you exclude one segment. So without further ado, let's get into the market and what kind of market we have. About 10 years ago, when I actually started working full-time in real estate, I had basically one type of property that I was dealing with, okay? Every home that I was selling had somebody who had been living in there for quite a while. They owed less than their house was worth, and they were able to negotiate with a buyer. So take, for example, Mr. Brown. Let's use this gentleman here. What's your name, sir? Okay, Carlos here. Carlos had a house. He had been living in that house for 15 years. He bought it for $60,000. It was now worth $150,000. He wanted to sell it to move into a different house, bigger house, whatever. And he asked me to put his house on the market. I did that. This lady here, what's your name? Andrea. She decided that she likes Carlos's house and she's gonna buy it. She made an offer. We have it listed for $150,000. She made an offer for $130,000. Carlos countered for $140,000. At the end of the day, we ended up selling the house for $145,000. She got a little bit of a discount. He took a little bit of a hit. Everybody walked away happy. It took 30 days. She had her loan in place. It took 30 days, closed, drove away. Everybody was happy. That was the whole market. That was the only type of property that was on the market. In our market right now, there are 3 types of properties. That situation that I just described is called a traditional sale. Okay, that's a traditional sale. And that right now is taking up about 30% of all of the sales that we have in the market. The second category of properties that we have in the market are properties that have a slightly different scenario. Carlos here bought his home 5 years ago and he paid $300,000 for it. The house is now worth $200,000. When he bought it for $300,000, he got a mortgage for $297,500. In fact, he may have gotten a mortgage for $302,000 because we used to get mortgages like that back at that time. Okay, so he owes today $300,000 on a house that is worth $200,000. He needs to sell. He's moving to another state. Andrea here is interested in purchasing his house. Does anybody here think that she cares that he owes $300,000 on this house? Do you care? No. Does anybody think that she's going to give him a penny over $200,000 just because he owes $300,000? No. Okay? So what has to happen is Carlos must now go back to his lender and ask his lender to accept a sales price that is less than what he owes on that property. He's asking them to be shorted, and that, very correctly, is called a short sale. So for all you guys who've been hearing out in the market short sales, that's what a short sale is. Now, unfortunately, what happens is that Carlos's bank was never really set up to negotiate on Carlos's sale. So while some people think that it's a short sale because it takes a short amount of time, it really should be a long sale because it takes a very long time. Okay, I personally have participated in a short sale that has taken 12 months to close. If there are two lenders, pack lunch, get comfortable, it's going to be a while. Exactly, it's going to be a while. All right? So that short sale market is about 40% of what we have out in the marketplace today. So you guys do the math. 30% traditional sale, 40% short sale, and then the remaining 30% is all foreclosed property. So if you make a determination that you're not going to buy a short sale or you're not going to buy an REO, what that means is that you are going to be working with only 30% of the market. Does everybody see that? Okay. It is important for you to recognize that that is the market that we're in. So you are going to consider short sales. You are going to consider foreclosures. You are going to consider traditional sales. But each type of property has some different challenges that go with it. In a traditional sale, you can negotiate. You come in, you can tell the seller, oh, I really like your house. You know, I can see my family here. And it could make a difference. In a short sale, you're dealing with the seller to some degree, but the final approval is coming from the bank. And in a foreclosure, you're definitely dealing directly with the bank. Okay, when you're dealing with the bank, to speak to this lady's point, the bank is not emotional. The bank is not going to sell based on whether they like you or not. What does everybody think the bank is concerned about? The highest price, the money, exactly. Okay, so if you're working with an REO or you're putting in a short sale offer, what you have to do is you have to make your best offer. As Mr. Bishop indicated, I list for Freddie Mac. I do list REO properties. And a lot of times I'll get agents that call me up on behalf of their clients and say, oh, my client really likes the house. And I'm like, okay, well, you need to put in your strongest offer. Well, we're going to offer $100,000, and then if they don't take it, we'll come back and we'll offer $120,000. Ladies and gentlemen, it's a one-shot deal, okay? If you can pay $120,000, offer $120,000, because what happens is that when your agent sends in your offer for $100,000, it's going to be joined by 10 other offers. And if one of those offers is $130,000, they're not coming back to deal with you for your $100,000. All right, so just be aware of that. I'm not telling you to overbid or overpay. I absolutely would not tell you that. But what you need to get into the habit of, if you are working with a foreclosure, you need to make your highest and best offer, because you may only get one chance to bid on that property. Is that clear for everybody? Does that make sense? Shopping for a home, the first thing that you need to do is make sure what? Any ideas? What's the first thing that we need to do shopping for a home? I'm going to give this corner a chance over here. What's the first thing to do shopping for a home? Get pre-qualified. You're awake. You see, you guys, well represented. Okay, all right. So the first thing to do is to get pre-qualified. All right? This is a great program, and I know you guys, I'm preaching to the choir, because the fact that you're here means that you recognize that you do need to get information and you need to be pre-qualified. What is the benefit of getting pre-qualified? Anybody have any idea? You know if you can get a loan. How much you're working with? Two good answers.
The seller knows you're serious.
The seller knows you're serious. This is a great group. I don't even have to do my usual spiel. Yes. It'll be easier to get a realtor to work with you. Anything else? You know how much money you need to come up with. All really good answers. So those are all the reasons. Did everybody hear those? Those are some really good reasons why you need to be pre-qualified. And one of the ones that I want to bring to your attention is you don't go looking at homes that you cannot afford. All right, guys, because that is the road to heartbreak. Pre-qualification is a very personal thing. Different factors play into each person's pre-qualification. There are components. If your income may be very strong, but your credit is not, one can offset the other. All right, so the first step in the process is to be pre-qualified. The second step in the process, and I know everybody is not in love with the real estate community, but please go out and hire a realtor. All right, that's the second step, hire a realtor. And the reason that I tell you to hire a realtor is because at the end of the day, you need to have somebody on your team that is working for you. Now, how do you guys look for properties? What are ways that we, just quick show of hands, what are ways that we use to look for property? Let me call somebody who hasn't spoken yet. Drive by, good. Internet, the paper, that pretty much covers all the techniques. When you drive by a property and you see a sign in the yard advertising that property for sale, and you call the agent that's listed at that property, that agent already has been hired by someone. Who do you guys think that agent is working for? The seller. And what the seller has asked that agent to do is he has asked that agent to get them the best possible price. Is that a high price or a low price? Okay, what you want is your agent to get you the best possible price. Is that a high price or a low price? So is it reasonable to expect that one agent is going to be able to negotiate on behalf of the seller and on behalf of you? No. Okay? Now, the best part of this, there's a lot of mystery surrounding real estate, and the best part of this that most people don't know is when you hire your agent actually still gets paid by the seller. Okay? Well, I answered it for you. Your agent still, so how it works is when, what's your name, sir? Cecil. When Cecil comes to me and asks me to list his house for sale, Cecil and I negotiate a payment. And since Cecil agrees to pay 5% or 6%, whatever the number is, if a buyer is presented with another agent, I now share that commission between myself and the buyer's agent. If the buyer comes to me directly without an agent, I keep the entire commission. Okay, I keep the entire. Please notice there is nowhere here where there is a discount for somebody not having an agent. Everybody got that? There's no discount. Because I've had people say, oh, well, I'm going to try and save some money. No money is being saved. Everybody, give me a second. Everybody got that? No money is being saved. So you are not doing yourself a service by not having a realtor. And the benefit is that when that realtor is working for you, they only get paid when what happens? When you buy. When I list for Cecil, if this lady buys, I get paid. If this lady buys, I get paid. If that gentleman in the back buys, I get paid. Am I invested in any of those people? No, I'm invested in Cecil because Cecil is the person who's going to see that I get paid. So it is important for you guys to recognize that you need to have somebody who is going to be compensated when you get the result that you want and not just when the house gets sold. Does everybody see that? Okay. And I tell my clients, I'm the only person in the world that will tell you, as your buyer's agent, I work for you for free. Anybody ever told anybody that? I work for you for free? Doesn't happen often. Okay, so make sure you hire an agent. And that's the way that the whole system works, not just with me, with any agent. So make sure you hire an agent. If you buy pre-construction, do you get a savings if you don't have a realtor? Most of the new construction that I've been driving by in recent times has a sign that says brokers welcome, and they actually still do pay the real estate commission, and it doesn't affect what you're able to negotiate. So, right, yeah. So it's still, and Even when you buy new construction, it's important to have somebody represent you because you should have an inspection, you should have all the stuff done that the builder is not necessarily going to advise you to do. So you need it more than ever. The reality is, ladies and gentlemen, all of us in the real estate community work primarily off of the MLS. Now let's go back to Cecil's example. Cecil asked me to list his house for him. When I take his listing, I go back to my office and I put it in the computer. And any agent that's working off of the MLS has access to it. The issue when you work with more than one realtor, when you work with 2 or more realtors, I personally don't work with anybody who's not working exclusively with me. Because what happens is that at the end of the day, Realtor 1 is sending you information, Realtor 2 is sending you the same information because we're working off the same database. All right, so it doesn't make any sense. You're not helping yourself by working with multiple realtors. And at the end of the day, somebody's going to be very, very mad at you because only one realtor is going to get paid when you buy. Somebody's going to be really, really mad at you. But, I mean, most serious real estate professionals, if you tell them that you're working with someone else, they basically close the door and walk away because it doesn't make any sense. How do you pick a realtor? How do you pick a realtor? All right, somebody who's aggressive, but how do you actually find someone who is going to work for you? Referrals, excellent. Sir, was that what you're going to say? Okay, referrals. The same way that you would pick a doctor or a lawyer or an accountant or any other professional, don't just take the first person that walks by. If you're also looking to get down payment assistance or you're working on the NSP program or any of the other programs, find somebody who is familiar with your program. Honestly, even though I'm a realtor, I will tell you that the real estate license is probably second only to a driver's license. Everybody has a real estate license. Everybody has a real estate license. Everybody has a cousin, auntie, friend, colleague, somebody who's selling real estate on the weekends. And I'm not trying to malign anybody, and everybody had to have a start. But you are a first-time home buyer. Your market is a challenging market. Find somebody who's doing this full-time, ladies and gentlemen. Find somebody who's sold a house before. Don't let your house be their first house. Okay, we can only have room for one first-timer on your deal. Okay, let it be you. All right? And I'm not saying that to put anybody down. It's just that in this market, it's complicated. So make sure that whoever you're working with knows the program, knows what you need, and can get you the most access to the most people and the most properties that they can. Does that make sense to everyone? Marilyn, how am I doing on time? Okay. All right, so the first step in the process is to be pre-qualified. The second step is to find a realtor, and you're going to find somebody who's familiar with your program, and you're going to make sure that you get some good referrals. The third step in the process is to actually start looking for a home. You're going to do all the stuff that you folks talked about earlier. You're going to drive by, you're going to go on the internet, you're going to do all those wonderful things. But when you find properties, what you're going to do is instead of calling the people on the sign, you're going to call the realtor that you're working with. Okay? And you're going to give them the address or give them the particulars, and you're going to have them make contact for you. All right? Everybody on board with that? Once that's done, let's kind of fast forward a little bit because I only have a few minutes and I want to make sure I get you guys through the whole process. Once that's done, it is important that you have all your financing in place so that you can make an offer. And bear in mind that even if you are getting down payment assistance, you are probably going to need, well, not probably, you're definitely going to need some money to be able to make a deposit on the home that you are making an offer on. Generally speaking, the minimum I've seen is $500. The maximum can be thousands of dollars, but you're going to need at least $500 to $1,000 to make a deposit so you can show the seller that you are serious. Is it important to show the seller that you're serious? Why? Doesn't bypass your offer because he probably has other offers. Okay, you guys are in tune. So it's important that you have that. Once you've written your contract and your offer, and your offer has been accepted, you are now in contract. When you go and sign your contract, please make sure, ladies and gentlemen, that you understand exactly what it is that you signed. Okay? Every contract should have an inspection period. Every contract should have an appraisal contingency. Every contract should have a financing contingency. So you make sure that when you're sitting with your realtor and you're going over your documents, they explain it to you. I've been to places where I've seen realtors come with a 10-page contract because the contract is long and it is boring. I'm not going to lie, it is very boring, but it's important. I've seen them take the documents, put it down, and say to the client, okay, initial here, 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 and sign here. Anywhere that you go that anybody does that to you, get up and run. Don't walk away from that agent, okay? It is important that you know exactly what it is that you're signing because that document has protections in there for you, and if you don't know what they are, you can't make sure that you remain protected. Let me just finish this thought. Hang on one second. Okay, you can't make sure that you're protected. For example, if you have a contract that has a 10-day inspection period and you do your inspection on day 11 and you find a major problem, are you protected? No, because time is of the essence in these contracts. So you need to know what, and every contract doesn't have 10 days. Some have 5 days. Some have 7 days. Some have 3 days. So you need to know what the time frame is that you're working with so you can make sure you get your ducks in a row and you can get that protection. Okay? Same thing with applying for financing. If some contracts require that you apply within 5 days. If you don't apply in the 5 days, then if your loan gets turned down, you have a problem. You are not protected. Does everybody understand that? So it is very, very important that you know what you're signing and you take advantage of the protections that are there. Yes, ma'am. Okay, there are 5 ways. This is the wrap-up. There are 5 ways that you can get out of a contract once you've executed it, once you've signed off. The first way is if you have an inspection contingency. And you need to make sure your inspection is done in time. The second way is if you have a financing contingency. Okay, if your financing doesn't come through, then you cannot buy the property. The third way that you can get out of a contract is if there is some type of natural disaster, a fire, a flood, that's going to create some major damage to the property and the seller can't fix it. You are not required to go forward on that contract. So we have inspection, an appraisal. Did I go over the appraisal? There's an appraisal contingency. You write an offer for $100,000, the appraisal comes back at 80, they can't make you buy it. You are within your rights to walk away, get your deposit back, and go and look for another property. That's a protection. So inspection, appraisal, financing, damage to the property, and then if you are in a condo or homeowners association, if they don't approve you, you can't be required to purchase. Those are your 5 protections. Ladies and gentlemen, please notice I changed my mind is not a protection. Okay, if you change your mind, you are putting your deposit at risk. Okay, they can definitely go and put in a claim on your deposit. So it's important to make sure that when you do write the contract, if you are not going to be able to go forward, you take advantage of one of those 5 protections, because if you don't, you're going to put your deposit at risk. And that deposit is held in escrow. It's not an additional charge. It's held in escrow and it goes towards any expenses that would be a part of your normal closing. When you purchase a property, say we have a contract for a property for $100,000. What we're going to do is we're going to the bank, and the bank is going to send out their appraiser. We don't get to choose the appraiser. The bank chooses the appraiser, because what the bank wants to know is that there is adequate collateral for them to make the loan to you. Because if you don't pay, they're coming to get the house. So at the end of the day, the appraiser comes out, they do their thing, and they come back with a value. If that value is less than what we've contracted for, then we go back and negotiate with the seller. If that value is more, we keep that close to ourselves, we don't share that with the seller, and you got the deal of the decade. That's just the way that it works.
Would you recommend hiring an inspector?
I would 100% recommend hiring an inspector. In fact, I would go as far as to say you should never, ever, ever, ever ever, did I say ever, purchase a property without having an inspection done. Okay, it's critical. That's one of the protections, and it's important that you get that done. One of the challenges that we're seeing in the market is because it is a seller's market, we're finding that the sellers are pricing the properties at higher than the appraised values. So that what's happening is that the properties are not appraising to the price. What I tell my buyers, I mean, there's no guarantee, but what I have found typically happens in the past, historically, if there is a problem with the appraisal and we're in contract and the seller has already waited 40 days for you to get to this point and no, it doesn't appraise, 9 times out of 10, you will get a reduction on an individual basis. The problem becomes when you try to get the reduction before you go to contract, because they're not going to be listening to you at that point. But once we have an independent third party, 9 times out of 10, they will reduce. There is that 1 out of 10 that thinks that you should overpay just because you're having the privilege of buying his property. He is out there, so I'm not going to tell you no. But most of them, with an independent appraisal, they realize that they're going to have to reduce the price. So you will get a price reduction, and it works out. All right? NSP is Neighborhood Stabilization Program. And what that is that's grant money that's available to help stabilize the neighborhoods that had major issues as a result of the foreclosure process. So the cities, in some cases, buy homes and rehab them or tear them down and rebuild them and offer them to people to come into the neighborhood to stabilize it at a significant discount or with down payment assistance, or they, in some cities, will allow you to go out and find any foreclosed property or short sale, and they will help you with down payment assistance to buy that.
Does anybody here know what fair housing is about or want to take a guess at it? Well, anybody here heard of Dr. Martin Luther King? Yes? Possibly? Well, that was one of the things he was fighting for back in the day. Okay? If you know your history. Right? Fair housing. Equal opportunity. Okay? And what happens is, especially we see that in the condo associations, where you don't get fair and equal access. Okay? And we're not talking about low-income condo associations either, or low-income associations in general. In some cases, it's the high-income ones. Hope Inc. is the agency that you may have seen them on TV, where they actually send out testers to go to a business or a association, and they send in some white people, some Hispanic people, some black people, and they see how they get treated. Okay? So they are a HUD agency, and they'll send testers out if they find that it's necessary. And if they find that the client is being discriminated against, they'll get attorneys to represent the client at no cost. Okay? And not too long ago, they actually won a case against a condo building on Brickell Avenue, where the condo was actually about $700,000, right? And the family bought the condo, and when they bought the condo, they had one child. The wife was pregnant. When they closed on the condo, just before moving in, she had the baby. The association said she can't move in, they only allow one child. So the other child should go live with the grandparents. Right? Now these people just paid almost $1 million for the condo, right? So the point I'm trying to make is it's not just low-income situations. They actually won the case. I believe they won over $700,000 on top of their condo. Okay? Yeah, they actually won the case. And Hope Inc. Represents elderly people, disabled people. They had another case where this lady, the association would not allow her to put in a ramp, and she was disabled where she could actually, in a lot of cases, only use her mouth to do things, and she had to be using her mouth to open the door, right? And the access to the condo required a ramp up to where the door was, and they wouldn't allow her to put in the ramp, right? Even though the law says if it's reasonable accommodations, you can spend the money at your own cost and make the changes. They're supposed to allow that. They wouldn't allow it, even though she was spending her money to make the reasonable accommodations. She sued, won, and, you know, the rest is history. But Hope Inc., and I'll give you the number, 954-567-0545. Housing Opportunities Project for Excellence. Okay? It's a really great organization. I actually was on the board at one point. They help the different cities, most of the cities in Broward County and Dade County, with their fair housing requirements. They talk about avoiding predatory lending, where you go to a lender and you have a really good credit score. Let's say you have a credit score of 720, and the lender is trying to give you a loan with an above market interest rate. For example, if you have a 640 credit score, you may be able to get an interest rate of 3.5%. And here comes somebody who has no information, doesn't know much about home buying process. They have a great credit score, and the lender wants to give them a 4.5% interest rate. You follow me? And it happens. And back when the housing market was really going along, it happened a lot. Okay? Because they make more money the higher the interest rate. They make more money up front, and they make money over the long term of the loan. So they take advantage of people's ignorance and charge a higher rate. Now, they also, in the past, they would put in clauses in the mortgage, for example, a balloon term in the mortgage. For those of us who don't know what a balloon is, that's when, for example, you get a mortgage and it says it's a 30-year loan, so it's amortized over 30 years, right? But it says in there there's a balloon after 5 years. So after 5 years, what happens is you're making the regular payments. You borrowed $150,000 to buy the house, and now they're saying because most of that payment went to interest, you owe $145,000, and you have to pay it at the end of 5 years. Right? So you either have to sell the house or refinance it. What happens when the market collapsed and the properties were not appraising? You could not refinance. So you went into foreclosure, right? The other one that we saw a lot of people being taken advantage of is what's called a negative amortized loan. And anybody here want to give a guess what that is? Anybody heard of a pick-a-pay loan? Pick-a-pay. Countrywide Lending did it back in the days before Bank of America took them over. Okay? Negative amortized loan. That was in the days when people were advertising. You could buy a $300,000 house and your mortgage payment would only be $1,200 per month. Your interest rate is 2%. Everybody ever heard those ads a couple of years back? Right? 2% interest rate. That was at the time when interest rates were at 7%, right? We'll give you a 2% rate, $1,200 per month, and you can buy a house for $300,000, right? In most cases, they were doing it as a negative amortized loan. What that means is they're giving you a 2% interest rate up front, but you're only making the payments on 2%. But they're actually still charging you 6 or 7%, right? The difference, that 5% interest, is being added to the balance of the loan. So you borrowed $300,000. At the end of 3 years, you owe $350. right? But you're still making that $1,200 payment. Not that you never finish payment. There's usually a clause in there that says after 5 years or 10 years, you got to pay principal and interest, right? So after 5 years, all of a sudden you get something in the mail. Your mortgage payment is now $4,500 per month, right? And sometimes that's without taxes and insurance. So what happens? Most of those houses went into foreclosure because not too many people can go from $1,200 a month or $1,500 a month to $3,500, $4,500 per month, right? So that's where the negative amortized loans really hurt a lot of people. The pick-up pay? Yeah, the pick-up pay is a variety of the negative amortized loan because the reason they call it a pick-up pay is because you had options on how much you could pay. You could pay the bare minimum, which was the $1,200 per month. You could pay principal and interest, which might be $2,000 per month. And then you could probably pay principal, interest, taxes, and insurance, which might be $3,000 per month. Most people choose to pay the least amount they have to pay, right? So that negative balance keeps adding up. And then when the time comes, you owe way more than you borrowed. You know, you borrowed $300,000. You now owe $350,000, and the house is worth $200,000. What are you going to do? Stay there as long as you can and don't make any mortgage payment, right? And then it goes into foreclosure, which is what a lot of people did and still doing. So you got to be careful of what you're signing, okay? And this is how it comes into the fair housing, because people are taken advantage of, because a lot of people just wanted to buy a house and I can make a $1,200 payment, I can make a $1,500 payment, and I want that 3-2 with a pool and a 2-car garage. I don't want to hear the details. Just give me the loan. I actually own a title company, and we've been in business 20 years. And I actually saw people where I literally told them, listen, you should not buy this house. You should not sign these documents. And they would literally say, listen, I got a U-Haul out front full of furniture. I got to move. And they would sign because they're under pressure, right? Or they just figure, I'll deal with it in 5 years when it comes around, okay? They weren't worrying about it then. So now most banks will only give you a 30-year fixed rate or a 15-year, 20-year fixed rate. Almost all the government programs that provide any kind of down payment assistance will only do a fixed rate loan, okay?
So I guess gone are the days of no credit check?
Yeah. Those are behind you in the rear view mirror. Yeah, the ninja loans. Yes, sir. Well, you could on pretty much any loan, unless it has what's called a prepayment penalty. A prepayment penalty is where they say you can't pay off the loan before it's due, right? Almost all loans do not require any kind of prepayment penalty. So if you get a typical loan at the bank, a 30-year conventional, FHA, whatever, there's no prepayment penalty, right? If you win the lotto tonight, my name is Chester Bishop, and I was real nice to you at the class. So, but if you win the lotto and you just bought a house, you can pay off that balance without any penalty. So if you borrowed $150,000, you pay off the $150,000 plus the interest that you owe, which might be $2,000, $1,000, whatever it is, and you pay it off, no penalty. But if you have a prepayment penalty, it might say you have to pay 6 months or a year's worth of interest to pay off that loan. Everybody following me? So you don't want a prepayment penalty.
Something with me. With the conventional loans, they normally do have the prepayment penalty. But with the FHA, they do not.
No, most loans do not have a prepayment penalty. If you're getting a loan with a prepayment penalty, you're getting some kind of exotic loan right now. So usually it'll state that on your good faith estimate, on your what's called a truth in lending statement, and I'll leave that for the lender to talk about a little later. But 90 8% of loans right now, there's no prepayment penalty, and you shouldn't have one. Whether it's conventional, FHA, VA, whatever it is. Well, the question is there any protection for the consumer against forcing them to sign a document that may have a prepayment penalty in there? Well, when you get a loan, when you go to the bank and you go to apply for a loan, by law, they must accept your application, right? They must accept your application, even if you make $10,000 per year. That doesn't mean they must give you a loan, but they must accept the application, right? When they accept that application, they normally have at certain time to give you a good faith estimate, okay? And the good faith estimate, normally they give you that when you get a contract, because when you have a contract, you would have gotten your pre-approval letter, you went and got a contract, so now you know how much that house is going to cost, sorry, and they can estimate all the closing costs based on that price. Because you may qualify for a $150,000 loan, but you only want one for $100,000, right? So they're going to give you the good faith estimate based on the $100,000, right? So when they give you that information, you don't have to sign that loan because it'll tell you on the little boxes whether there's a prepayment penalty, if it's an adjustable rate. It'll have what's called the APR, or annual percentage rate, on there. And at that point, you can say, no, you don't want that loan. You can go to, there are like literally hundreds of lenders. You can go to another lender. But I don't see too many people offering loans with prepayment penalties right now, or the negative amortized loan. Because when President Obama came in and they created the Consumer Protection Agency, there's a lot of new laws that protects the consumer now. With REO properties, or real estate owned by banks, a lot of times they'll put all the costs on the buyer. For example, doc stamps, which is the tax you pay when you transfer the property, the tax on the deed. A lot of times the REO properties will put in the contract that they want the buyer to pay it, when typically it's a seller's charge, okay? So if your lender is not looking at the contract carefully, you might go to closing and you need more money than you thought you were going to need because they didn't read the contract properly to say that doc stamps are going to be paid by the buyer, or that title insurance, which sometimes that's the good side is they'll pay the title insurance rather than have the buyer pay it, which is typical, okay? But you have to read the contract because they'll put in their pay attorney's review fee or something like that, okay? So you do have to pay attention to that. Normally when you go to the bank and you get pre-approved for a loan, they'll give you a pre-approval that says it's good for, say, 60 or 90 days. So it doesn't matter how many contracts you sign within that 60 or 90 days. That pre-approval is still good. Now, if you sign and you back out or you lose the property and you only got 60 days and you're now in the 70th day, a lot of times all they really need is some updated pay stubs to get you an extension, because they already have your tax returns, they already have your bank statements. So you give them some updated pay stubs, and they'll give you an updated letter. Let me just say this, okay? You can't just take one piece of information and say, I might say, okay, it's bad based on just that credit score, but I've seen people with high credit scores, but they have high debt. You follow me? Fair housing. You want to make sure that when you're buying a house, that you're afforded equal opportunity, to get credit, right? That if you go to the lender, they're not giving you a rate that's out of this world, right? And part of that is you doing some of your own homework, like coming to the workshop. Because if you think 4 1/4 is normal, then you're going to sign and you're going to take it and you're going to be happy and go home, right? But if you find out, wait a second, everybody else is getting 3 1/4, 3 1/2, why am I getting 4 1/4? And if you check that out, over 30 years, that might be $50,000, $60,000, $70,000, right? It's a lot of money. It might sound like half a point, but it's a lot of money over the time period, okay? So, fair housing requires that you get opportunity to get fair credit, okay? And discrimination comes in all shapes and sizes. And a lot of times discrimination will show up not straight in your face, but you know, they'll put out an ad, for example, even on rental property, buying a property and say the property is available. And then when they hear your voice and they figure you're a minority or something, they'll say, okay, it's not available, okay? And that's where the fair housing testing comes in through HOPE. Condo associations. Can they discriminate against you because of your age? Yes, right? A lot of condo associations have over 55 requirements. You have to be over 55 to buy in that complex. That is a legal right of condo associations, okay? So you can't say, okay, I'm 49, why aren't you letting me in? Okay? I will add, though, that because the way the condo rules are and the rules are written, in some cases, if over time the association falls below the limit at which they're 55 and over are required to have, a lot of times they will allow you to come in if you're like close to 55, if you're 53 or 54. So don't always figure, okay, I'm not quite there and I really love Sunrise Lakes Villas or whatever it is. Sometimes you can get approved if you're borderline, okay? And I'll just tell you, it's really important when you're buying a property that's in an association or in a condo, whether it's homeowners or a condo association, to read the bylaws, even if it's the summary, to see, you know, do they allow commercial vehicles in there? Do they allow vehicles that have signs on the doors? You know, I've had people buy properties and only to find out they can't drive their vehicle into the complex because they don't allow SUVs, right? Or they don't allow dogs over 10 pounds. I mean, they can ride it like that. They don't allow cats. They don't allow any pets, not even a fish. Okay?
Does the condo association have to tell you why they denied you?
No. They don't have to tell you why they deny you.
It's so great to be here in the City of Miramar at our Homebuyer workshop. Now, the last time I was at a workshop, it was actually a foreclosure workshop that I hosted, and it's so great to host something so dynamic and fluid and hopeful. And the participants here today, there's over 200 folk here today that want to get information on how to purchase their first home and information as far as incentives provided by various means. The City of Miramar also is providing incentives come July. And so it's just great. We just want to thank the Housing Corporation of America the Housing Foundation of America for their participation in this workshop. And we hope to do more of the same. Now, you know, in various parts of the city. This is central located, and hopefully we'll do something similar in our eastern sections and in our further western sections. But you know, we hope to do this on an annual basis to take advantage of the low interest rates and of the availability of homes in the City of Miramar. We certainly would love for folks, even though they can go anywhere in Broward County, that they would try to buy a home and purchase it here in the City of Miramar. So hopefully, if you didn't make it to this workshop, you'll make it to the next Homebuyer workshop, and that you'll choose to make Miramar your home.
We're glad that everyone came out to today's first-time homebuyers workshop. There's a wealth of information to find out the resources that are available for homebuyers and prospective buyers to help them finance the purchase and acquisition of their home. We all know that we're climbing out of the economic challenges that has been felt nationwide, and funding sources have been diminished, but monies are beginning to trickle back, and we are able to help more. So we're definitely encouraging prospective buyers to come to the City of Miramar to learn more about some of our home buyer assistance program, as well as some of the other resources that are available from the county, the state, as well as also from the lending community. So on behalf of the City of Miramar, we're glad to and proud to support all the resources that we can make available to prospective future Miramar homeowners in our city. So make sure to come out the next time, and just like to give a big shout out to our Vice Mayor for sponsoring and hosting this event.